Bitcoin went through what some people call a halvening. To summarize how Bitcoin works, miners are rewarded Bitcoin in exchange for verifying transactions on the Bitcoin blockchain. This is called mining. Back in 2009, block rewards were 50 Bitcoins. During this time, you were able to mine Bitcoin using your everyday computer. Approximately 4 years later, at the end of 2012, this reward dropped by half to 25. With the same computing power, you are now only rewarded for half of your work. This was known as the first Bitcoin halvening. It didn't seem much at the time, but it was a significant change. Think of it this way. Your cash that you have in your checking account loses its value by 2% per year. That's why in the 1990s, you were able to buy a loaf of bread for 70 cents, but today the same bread costs around $2. On average, inflation rates go by 2% per year. But when you start putting more money into the economy, like what we're seeing now, you can expect higher than normal inflation rates in the following year. Satoshi Nakamoto, the inventor of Bitcoin, knew that future technology would advance. So he programmed the mining difficulty of Bitcoin to also increase over time. So all existing Bitcoins increase in value. And he was right. People were now mining Bitcoin with specific specialized computer hardware that only do one task: mine Bitcoin. Now we're at the time where people are spending thousands of dollars on these mining rigs. You'd still have to join a group and combine your computing power to see a decent return on investment. You might be asking,
why are people spending thousands of dollars for only a small profit?
It's because they believe mining Bitcoin, even at a loss right now, they expect the fractions of Bitcoin to be worth thousands of dollars in the future. That's why there were people in 2017 who were going back to landfills to find their old hard drives that they threw out that contain hundreds of Bitcoins. What they thought were only a few dollars back then turned out to be millions, all under 9 years. Satoshi Nakamoto also hard-coded that there could only be 21 million Bitcoins in existence. Currently, we are at 18.3 million. Once the last Bitcoin is mined and we reach 21 million, no other Bitcoin can be created. The only way to get Bitcoin after the cap has been reached is by trading, which means Bitcoin would increase in value. Since 2009, Bitcoin have 3 times, from 50 Bitcoin per block down to 25 to then 12.5, and now as of recently 6.25. As of now, Bitcoin's price fluctuations are just noise when looking at it long term. The law of supply and demand indicate that on a macro scale, let's say 5 to 10 years, Bitcoin's value would basically skyrocket. Now you can kind of see the rarity of Bitcoin. If you made it this far, don't forget to hit that like button and subscribe, and comment below when you bought your first Bitcoin.